Good afternoon, all. Thank you for joining us. We're hoping to cover some additional items that may be relevant to you and your employees and the congregations with respect to some recent changes in both federal and state law regarding benefits for those who have been impacted by COVID-19. So we hope you find this information useful. As Carrie mentioned, we are monitoring the Q&A and we'll try to address questions as they come through. At the end of this presentation, you'll see a slide with both Judy and my contact information. We're always more than happy to answer any questions, or feel free to give us a call if anything comes up that isn't addressed during the presentation. We've got quite a bit of content to go through. We're hoping to give you a high-level overview of some of the key benefit programs out there and changes to the law, so you're aware of that. But please know that a lot of this may be applied in very unique circumstances in your congregation, depending on the employee, depending on what you have or haven't opted into, and depending on the impact to you. So we'll go ahead and dig in. Today's agenda.
I'm just going to interrupt you for a second to say that the slides will be sent out afterwards to all of the participants by April. Thanks.
First, we're going to cover the Federal Families First Coronavirus Response Act. Judy's going to cover some changes to sick leave policies. And I'm going to cover some changes to FMLA and some emergency FMLA provisions. Then I'll cover just a kind of a brief overview or reminder for those of you regarding Washington's Paid Family and Medical Leave Act and workers' compensation. And then Judy's going to cover some unemployment benefit changes for church workers and those benefits for independent contractors and self-employed individuals. And then I'm going to cover SBA loans for independent contractors. So it's kind of a extension a little bit of the webinar on earlier this week.
Okay. So the Families First Coronavirus Response Act imposes new job protections for workers, paid leave mandates for employers, and it has a generous reimbursement scheme for employers that are designed really to help the employers and to keep employees, if not employed, at least with benefits so that they can support themselves through this difficult time. So there is a sick leave portion of this act. And there is another leave program for family leave for care of a child, and then there are refundable tax credits for the employer. So this applies to employees with fewer than 500 employees. So for all of the congregations, I think this would be effective. And all employees, whether they're full-time or part-time or temporary employees, are eligible under the Act for leave. They are in effect from April 1st until December 31st of this year. There is a poster that all employers must post explaining rights at the workplace in a conspicuous place. And you can find those posters by Googling FFCRA poster, and then it comes up. And both through a state website and also through the federal website. Small employers, those with less than 50 employees, may qualify for exemption from certain aspects of the law if the leave requirements that are in the law would jeopardize the viability of the business. So the first part of the Act covers emergency sick leave. So an employee is entitled to 2 weeks, which is up to 80 hours of paid sick leave at the their regular rate of pay, with some maximums that are there in the parenthetical, if they're able to work or telework, because they're subject to a quarantine or isolation order from the government, or they're in self-quarantine on the advice of their medical provider, or if they're experiencing COVID-19 symptoms and are seeking a medical diagnosis of care. Then there is a second emergency sick leave, which is 2 weeks. And this is at 2/3 of the employee's regular rate of pay with some maximums in the parenthetical if they can't work or telework because they're caring for an individual, usually a family member who's subject to quarantine or an isolation order, or they must care for a child whose school is closed or the child care provider is closed related to COVID-19, which is, of course, our situation for, I think, almost all schools in the state. Or the employee is experiencing a substantially similar condition as specified by the Secretary of Health and Human Services. So special circumstances. This applies to all employees, so it doesn't matter how long you've been employed by the church. It's in addition to any other leave that you may provide to your employees. And you can't reduce the amount of leave already offered in response to the act. So this really is in addition to what you already provide. And if you close your, if you're closing, and of course all the churches are closed, that won't alone give rise to the benefits under the FFCRA, under this sick leave. So the employee must meet one of those criteria that we just discussed in order to get the sick leave, one of the two sick leaves benefits. There are tax credits under the Families First Act, which allow you to reduce the amount of your payroll tax department deposits for qualifying payments made to employees under the sick leave plan. And if those payments exceed your payroll tax deposits for that period of time, you can request an advance payment of the refundable credit from the IRS. It's an IRS Form 7200, which is apparently now available on the IRS website, which can be completed and filed, which would accelerate the payment of the refundable credits to the congregation.
So in addition to the 2 weeks of sick leave, there's been an extension of FMLA benefits to all employers, and including an addition of a paid portion of this, which did not exist under the law. So this is prior to this date. So this is a new benefit that is eligible. Certain eligible employees who qualify for FMLA under the criteria mentioned before can apply for. So the benefit is 12 weeks of paid family and medical leave. Now, traditionally under FMLA, if you are an eligible employer, you were required to provide leave to employees, but that leave didn't necessarily need to be paid. It's now a requirement under the same dates that were mentioned earlier to offer a paid leave after this 2 week of emergency sick leave. So the remaining 10 weeks are paid at 2/3 of the employer's regular rate of pay, up to a maximum of $200 per day and $10,000 in the aggregate, if they qualify for this leave. And it applies to employees who have been employed by the employer for at least 30 days. In addition, it is in addition to other leave provided to the employee by the employer. And again, you can't make any changes to your benefit policies on the basis of this new act. And again, similar to the sick leave, a worksite closure or furlough doesn't qualify, and this leave may be taken intermittently. So the obligation of the employer or the church would be to work with the employee on a schedule or make some kind of reasonable accommodation. There is an exception for small employers, less than 50 employees, which I would gather is the majority of the congregations. The employer can seek the exemption requiring leave for purposes of school or child care closures. So the law may not necessarily, if the employer seeks that, they wouldn't necessarily need to provide this benefit under that condition. And there is a test that you have to demonstrate that the leave requirement would jeopardize the viability of the business as a going concern. And then like the sick leave, there's a fully refundable tax credit equal to the required family and medical leave. So this is being subsidized by the federal government through that federal tax credit. And just checking real quick, see if we have any questions. Doesn't look like it.
You know, I do want to add that one of the things that in the materials that I've read is that this law, because this law, the way that they've designed the way that employers get the tax credit is really a testament to nonprofit folks lobbying Congress, because typically they would have done this as a credit to your income, to your corporate income tax, and since nonprofits don't typically pay corporate income tax, this is a benefit that all employers can experience and use.
Yeah, I have a quick question. So someone has said that they've told people they'll offer sick leave specifically for COVID-19. It would not affect people's regular sick leave. So that's something, of course, any employer is always able to do. So none of these laws restrict your ability to offer greater benefits. Consider these the floor of what has to be offered, not the ceiling on what you need to offer. So, but if the employee is receiving benefit under a separate program, I don't know if they would receive the tax credit necessarily. Judy,
not for the regular sick leave, but they certainly will for the sick leave under this act, the 2 weeks.
So yes, these acts would help cover costs for retired benefits if they're provided in accordance with the qualifications in here. And then another person asked, would we have an employee receiving both pay under the Payroll Protection Act while not working and this sick leave? The answer would be no, because they would be employed at that time. So this only applies if they're not receiving compensation. And there is some intersection between these two acts where you can't necessarily double dip into both in order to benefit. So
right, because you could take the sick leave and still be an employee, but you can't receive pay under the PPP and you can't double dip.
So, and then that, yes. And so that answers the other question, which if we continue to pay our employees their regular pay, can they also qualify for sick leave or FMLA? No, they would have to not be working to fall within these, or within one of the qualifying events under these programs. And then someone asked about if we paid payroll in March and get this in April, can we get credit for the March payroll? Do you know the answer to that, Judy?
No, is this the loan, the PPL? They mean the PPPL? Yeah. So if this is the PPP loan, you actually don't start the timing of how you calculate what you get credit for until you actually receive the loan proceeds.
Mm-hmm. Okay.
That's your 8 weeks, and that's the 8-week period in which you show that you spent at least 75% of the proceeds on payroll.
Should we keep going? I guess.
Yeah. Oh, unemployment benefits. Oh, my favorite part. Okay. So the State Employment Security Department has adopted a series of emergency rules to relieve the burden of temporary layoffs and isolation and quarantine for workers and businesses during the COVID emergency. In addition to the state changes to help employers and employees, the CARES Act, adopted by Congress, creates a pandemic unemployment assistance portion of the act, which specifically addresses unemployment benefits. Okay, so the CARES Act provides federal funding for unemployment benefit payments. The thing this is really wonderful for is that it means that employers' share of unemployment will not be increasing because the additional benefits are actually all being paid for by the federal government. So that is good news. If your congregation is one of the reimbursable employers, that is, if you've elected to reimburse the state for unemployment benefits that are paid to an employee who is receiving benefits, So the benefits that those folks are receiving is that 50% of those benefits are actually going to be paid by the federal government and not by you. And in addition, the workers of those organizations are eligible for a supplement under the federal act of $600 a week. A benefit is that independent contractors will now be able to collect unemployment benefits, and they can start claiming those benefits from the state. The state is now saying mid-April, because they've had to make some changes in their systems because independent contractors previously have not been able to claim unemployment. And then church employees, so workers employed, employees of your church can receive these unemployment benefits as long as their work isn't primarily for religious purposes. And that's, I think for our churches, that's really going to be the clergy. Folks, although if you have questions about that, maybe check in with Bryan or me so we can sort of look at it really has to do, I believe, with the amount of work that a person does for religious purposes versus work for the entity that wouldn't be considered religious, and how those two interplay with respect to individuals' jobs. So there is an ability under state law to do what's called a standby. So this is where you're temporarily laying off employees, but you have plans to hire them back. So that can be either one employee or more. The Employment Security Department, you need to request the ESD in order to do this. And the benefit of standby is that it means that the employees don't have to meet the job search requirements that are typically required in order to continue receiving unemployment benefits. So during whatever that standby period that's been approved is, workers can receive unemployment benefits and not have to do the job searching. In order to qualify for the standby, you have to have the employee must be a full-time employee, and they must be returning to full-time work and have a probable return to work date. And typically, under the regular rules, 8 weeks is the longest a standby can be on a claim. But in the next slide, we'll see that that's been extended to 12 weeks under the by ESD, under the emergency rules. So you can do standby under the emergency rules even if the employee is working some part-time. So you can either fully lay them off, or you can keep them for reduced hours as a standby, and they can receive unemployment benefits as well as their payment for compensation for the work that they're doing. Under these emergency rules, employers and employees can request the standby status. And the employers can apply for relief from the benefit charges that are incurred while their employees are in standby, and they have to apply for that by the end of September of this year. And the other rule that I went over but is there in the materials is that if you ask a worker to do work, they actually have to take that on because they are on standby. It's one of the rules of being on standby. So another form of temporary layoff that's permitted by the employment security folks are furloughs. So that consists of a complete stoppage of work or reduced work hours for a specific period. So they're still your employee, but they're stopping work or they're reducing hours for some particular period of time. You can furlough one or more employees, and those employees, the real benefit is the employees may be able to receive partial unemployment for the time that they're on furlough, that they're not working. So under the state employees in unemployment benefit system, unemployment benefits are determined on a weekly basis, and the amount that a worker receives depends on their income. So if you are just reducing people 1 day a week, and paying them for 4 days a week, they may not qualify for unemployment benefits because their income may still be too high. But if you're moving toward a real part-time situation, then they would be able to receive both compensation for the portion that they'd worked and unemployment benefits for the time that they weren't working. As part of the calculation, the employees must report not only the compensation they receive, but any sick leave, paid time off, vacation time, or any other supplemental payments that are all part of the amount that's considered when they're determining what your employment benefit should be for that week.
So we had a quick question, Judy.
Yeah.
So someone asked if a thrift store worker would qualify for unemployment, but only if the church is paying for the state for unemployment. Is that right, or?
No, not necessarily. No, if you're either going to be a reimbursable employee, that is someone who's going to pay when you have someone on unemployment, then you pay the state back for unemployment benefits, and under that rule, the state would pay unemployment, and you would still have to reimburse the state, but only for half, because the federal government would pay the other half of the unemployment benefits.
And I don't see any other questions. So just a reminder, if you have any questions, feel free to drop them in the Q&A. Washington's Paid Family and Medical Leave Act. This is a relatively new benefit offered by the state that predates this most recent crisis, and is a paid benefit for employees. So both employees and employers pay into the system. It's a Washington state only program. Eligible employees must have worked at least 820 hours for a Washington state employer. So it doesn't have to be the same employer. It can be any employer within the bounds of Washington state. And a premium is collected on every paycheck. And that premium is split between the employee and the employer. If you're a small business or less than 50 employees, you have the option of requiring the employee to pay a portion of that premium. But if the employer elects into it, and some entities have elected into it, there's grants available from the state to cover temporary work for employees who are using that benefit. It's 12 weeks of paid leave, up to 1,000 per week, based upon the percentage of weekly which is based on a formula which is determined on what they were making prior to the leave. And the leave is job protected unless the employer is less than 50 employees. And then there's some, it's not necessarily job protected in that circumstance. And the application for this is through that website you'll see below. Keep in mind, you cannot take both unemployment as an employee and this leave. And if you are receiving benefits through your employer, you may not be eligible for this leave either. So this is kind of the backstop for some of these other programs that are in place, kind of the last resort if someone qualifies under this program for leave for sickness or a diagnosis. Judy, there was a couple of questions we had about unemployment. First question is, what is an example of a reimbursable employer? Why would an employer choose to reimburse the federal government?
It's not reimbursement to the federal government. It's actually reimbursement to the state government. And it's an arrangement that you make with the state of Washington so that you can opt out of making regular payments for unemployment to the Employment Security Department. But then if someone does leave their job and apply for unemployment, then that employer needs to pay the state back for unemployment benefits because that employer has not been paying into the system.
And then someone else asked, so if we did not opt into unemployment, is it available now under this act?
I do not know the answer to that question. I would suggest that you check in with the Employment Security Department and ask.
Okay. Another program that may or may not be relevant, primarily probably to some of your parishioners or members of your congregation, are workers' comp and L&I benefits. So every employer pays into the workers' compensation system, which provides benefits for employees who are injured on the job or become sick on the job. And there is some extension of benefits for the COVID-19 crisis. It's primarily geared, however, though, towards first responder and healthcare workers. It's not an explicit restriction to those, but the tests for these benefits has been designed with that in mind. So the benefits include payment towards treatment and also may include time loss benefits if the employee is sick or unable to work as a result of a diagnosis or is receiving care. To receive benefits, the employee applies to the state, and the 3 following criteria must be met. So all of these have to be answered yes to qualify. So the first is, was there an increased risk or greater likelihood of contracting the condition? And these are taken straight from the state's website. So this is what they'll be asking. Likelihood of contracting condition due to the worker's occupation. If not for the job, would the worker have been exposed to the virus or contracted the condition? Can the worker identify a specific source or event in the performance of his or her employment that resulted in exposure to the new coronavirus? So examples include first responder or healthcare workers who has actually treated a patient with the virus. So you have to answer yes. What's unclear is whether, say, for example, chaplaincies or visits to hospitals on behalf of clergy would qualify within this if someone was contracted. But L&I would make that final determination. But an important exception is when the contraction of COVID-19 is incidental to the workplace or common to all employment, such as an office worker who contracts the condition from a fellow employee, a claim for exposure and contraction of the disease will be denied. So it's not a very clear test, but it is an option available if benefits are needed. And then finally, this is just a little squib in addition to our program last week or earlier in the week. The days are kind of running together. If you recall at the prior presentation, we primarily addressed the payroll protection program for congregations and nonprofit entities. One of the important provisions of the Act was that it extended those loans to independent contractors. So individuals who are not employees are eligible to apply for these SBA loans. In order to qualify, the person, self-employed or independent contractor, must have been in the business that they're applying for on February 15th, 2020. They should have typically received what's known as a 1099 miscellaneous or have a documentation like a profit and loss statement for their business income and expenses that gets reported on their taxes. The eligibility for the benefit is 2.5 times your average monthly income, and it's basically used to replace that payroll expense to yourself for the 8-week period. But then the same tests apply for forgiveness. 75% have to be used for payroll costs and the remainder for other expenses. And if it's not forgiven or any expenditure isn't forgiven, it's a 2-year term and a 1% interest rate, and payment is deferred for 6 months. Like the rest of the Act, there's no specific exclusion for religious workers or churches or anyone associated with the church. So it may or may not be relevant for anyone who is an independent contractor. And as a reminder, if the church is applying under for the congregational loan, they cannot use those expenses towards independent contractors. It's only towards W-2 employees. And the reason why is those independent contractors are eligible to apply for their own loan under this program here. The loan application opens up for independent contractors tomorrow, April 10th, and you'd want to apply through your financial institution. Do we have any questions? I think that works through the slides we had worked up.
And feel free to have questions. If you have any questions on the PPP loans, also feel free to ask those.
Oh, here we go. The loan, I'm assuming the loan reply, we received access to collect payment details for our contractors, so they could have changed the rules. No, I haven't seen any changes. The definition, and this is where it gets kind of confusing, the definition of a business concern would be someone who has either payroll or independent contractors, and I think that was wrapped in. So essentially, if the church applies for it and is using it to pay independent contract, they can't use it to pay independent contractors. So it's just the W-2 employees for the church. But the independent contractor themselves can apply for one of these loans or grants under the same provisions as if they're their own business. So think of the independent contractor like a little mini business, or like a solo practitioner in the context of law, if someone just works for themselves and that's the company. So they would apply for the loan on that basis.
And also just want to ask, I wonder if are they 1099 contractors too? Because maybe they have some sort of weird relationship in which they didn't give a 1099 to a contractor, they'd be considered an employee. I don't know. It's weird that they would have gotten that question from the bank.
So we had a question about the EIDL loans. We did not cover those in depth, either at the earlier webinar or this one. The difference between these programs and the EIDL loans is that the EIDL loans are actual loans, so they have to be paid back. There is a grant component to them of up to $10,000 that is immediately funded, but that takes away from the payroll protection benefit. So you can apply for both, but you won't be able to double dip in both. The loan has a longer term, so I believe it's a 10-year term with a lower interest rate for nonprofits, but it's still, at the end of the day, a loan and should be evaluated when you're considering your options. There was a question about the employee retention credit. We haven't covered that in depth, but we could prepare. Judy, do you have anything on the retention credit?
I don't, but if you want to answer the question above, I can look and see if I could find something quickly.
Sure. So the other question was, there was a previous presentation. Yes, we did one earlier this week. I believe it was, I don't know if a recording of it was made. I believe it was, but Carrie should be able to answer that. And we can get a copy of at least the slide deck or the materials to send over to you if you ask. It covered the PPP program, the SBA payroll protection program that is basically that 8-week grant to cover payroll expenses.
Yes, we do have that video. We created that and we have it, and it should be up on the website. If you can send me an email, I can send you back the link if you're looking for it, but I believe it is on our website now, or at least on our YouTube channel. But if you send an email to me, kallman, Kallman, at ecww.org, I will see that you get the link to that.
I don't have the answer on the retention right now. I'm sorry.
Okay.
Well, let's see. So we can I'm sure we can post it later somewhere. Carrie, is there some way we can send it out to people?
Yes, I believe that after the first presentation, you had some follow-up questions that you did apply, and so we can do the same thing with this second.
Great.
As well, we'll just add that as an addendum.
That would be great.
A text addendum to the video.
Perfect. Thank you.
Question about sick leave and the FFCRA for up to 80 hours. Judy, I don't know if you wanted to take that.
Well, you first need, you can't use them at the same time. But you can, I don't think there's anything that would prevent you from doing both if they took longer than if they needed longer than 2 weeks to recover from their illness. That is under the theory that you can always offer people more. But you wouldn't get the credit, the tax credit that you get under the Families First for the regular sick leave.
Question about applying for the EIDL and receive nothing. That's a question, and it's really hard to get answers. It should be factored in the loan amount if you received it, and you'll need to check with your lender on that. And I don't know at what stage in the loan application process, so that would probably be a better question to ask myself or Judy after the webinar, that we can go into a little more depth. If you want to email us, we can double check that for you.
And Dee Dee says that they'll be sending a follow-up on Tuesday.
If that answered everyone's questions, if there's any other. Okay.
Looks like it.
Okay, well, hope you're all having a holy Monday, Thursday, and are being safe and healthy and well. So if you guys need anything, our contact information is right there. Feel free to reach out to Judy or myself, and we're always here to help you.
Thanks.
All right, take care.